We turn now to an update on the cattle markets and the outlook for beef demand through the end of this year. Here to share some insights on the market is Lance Zimmerman of CattleFacts. Lance, this cattle market has been tough. We've really broke to the downside in a big way. Tell us what's happening.
Well, really, I think what's shocking folks today is the magnitude of the current break. And for the last 10 years, we've heard a lot of rumbling out there in the industry that is the cattle cycle dead. And I think what we need to realize is the cattle cycle was never really dead. That traditional ebb and flow of prices along with the ebb and flow in supply still existed over the last 10 years. It was just muted through a historic drought, a 100-year drought cycle that we just went through, as well as record high grain prices. And so the magnitude of this current break is probably a shock, but we shouldn't be thinking that this is uncharted territory, that this is something we've gone through in the past. We just got to reacclimate ourselves to what that really means from a market standpoint.
So what do you see for the rest of 2015?
Yeah, as we look at 2015, I think what we need to realize is the futures markets, they're anticipatory. And so they're going to price in, just like they priced in really extreme price highs as we looked at first quarter of this year and fourth quarter of last year. Now they're pricing in really extreme lows. And so it's our expectation at CattleFacts that because we've broken these prices in most classes of cattle 20% from the early year highs, that we're likely pricing in an extreme low. That's going to last not just through this year, but likely the next couple of years. And we're going to rally from here into the spring, and then we'll still have our traditional seasonal market factors where we have spring highs and fall lows for a lot of these different classes of cattle.
I'm amazed at the retail market right now. I've seen some hamburgers high as $5 a pound, and I guess I would ask you, are we hitting a retail price that is dampening consumer demand for beef?
I think that's a good question for us to ask as an industry because we are probably the most expensive protein in the meat case outside of seafood. But I think we're seeing a lot of research that says, yeah, beef is expensive, but it's worth it. There's research that came out of Kansas State University this year that said that consumer sensitivity to beef prices isn't what it used to be even 10 or 15 years ago based on prior research. There is data from the University of Missouri that said as we increase the quality grade in the beef that we're producing, again, that consumer's price sensitivity to that beef decreases. And in addition to that, I think that a lot of the data we're seeing, whether it's a consumer sentiment index, consumer comfort index, a lot of them are saying that the consumer's telling us that they're better off today than they were at the same point last year or even 2013, and clearly better than they were in 08, 9, and 10 coming out of the recession.
That is interesting. So tell us this. How can we go from an incredible high in the cattle market to a point where consecutive years are so different? I mean, what would you tell producers in that regard?
2014 and even early 2015 was really the perfect storm for cattle producers. We were at a point where we were ramping up expansion efforts hardcore. Coming out of 2013, we started retaining heifers. Into spring and summer 2014, we cut back cull cow rates, and broiler and pork production really hadn't increased yet. They were dealing with some production struggles of their own. And so we had a consumer that was just wanting protein and couldn't get enough of it on the domestic market. Now we're in a situation where pork production's record high, broiler production's record high, and beef production's still at 20-year lows, but we can sense the expansion on the horizon. We see the growing cow numbers, we see the extreme reductions in the percent of heifers in slaughter, and the futures market's telling us, hey, let's pump the brakes a little bit on this expansion. Let's make sure that we have some demand base still around us after going through these extreme high prices, and then the market will give us that indication of how long we continue these expansion efforts.
Clearly, from a historic standpoint, these prices are still quite good, but what would you tell our viewers who might be watching and are a little worried about what they see unfolding in the marketplace right now?
Yeah, I think the biggest thing that they need to recognize is coming off of these price highs, the industry has the most equity at risk than they've ever had from a dollar per head standpoint as an industry. And so that means taking caution, but that also means that there's a lot of opportunity amid this volatility. Take opportunities when you see cycle highs or price highs in a particular year to explore all your marketing options. Maybe that's forward contracting, maybe it's video auction markets, maybe it's participating in futures and options. But utilize those tools to get out in front of some of these trends to try and preserve that equity that's been built into the market over the last 5 years.
Great advice and always great perspective from the CattleFacts team. Thank you so much.
Thank you, Kevin.
If you want to keep up on all the latest news in the cattle industry, just visit NCBA's website at beefusa.org. And for more expert analysis on the cattle markets, please be sure to visit cattlefacts.com.